Hi guys, and welcome to this very special session in which I've got a gift for you today for all my viewers and supporters, and I'm very happy to be able to give you access to 3 of my indicators that I'm working on. Yeah, I will show you what I've got in store for you, and hopefully this will be very interesting for you, very helpful to supplement your own analysis. Let's dive right into it. So the first thing you want to do, you have a clean chart, go to the 90 minutes chart. If you got the free version of TradingView, it's probably not possible to go to the 90 minutes. I don't know that for sure, but I think it's not included in the standard selection. You can then go to the 2-hour chart, for example. It will be very similar. But for now, we are going to use the 90 minutes chart, and you're opening up the public library on TradingView, and you are going to look for my name, FireflyTA. Right now, as you can see, not all indicators are uploaded there yet. I have the adaptive range and pressure heat map things, but these are not the ones I want to talk about today. One of them is already on there, algo score MTF. This is the first one. And there are 2 others that are not yet uploaded, as you can see, or not yet registered by the database. So what you can do if you're encountering this problem, you can go to my TradingView profile here. It's niche 19, and there you can you go to scripts, and you can see at the top there are 3 scripts labeled FireflyTA, Market Flow COG, Market Flow COG oscillator. This is overlay, this is oscillator, and this is the algo score MTF. These are the 3 indicators that I will explain how to use today. To get them in your library, in case they are not available in the public library, check this bookmark option here. Add to favorite scripts, all 3 of them, then it will automatically like the script, and you will gain access to it in your favorites folder. So if I go back, you can see that when I go to favorites, there are the 3 indicators in there now. The algo score MTF, I'm going to activate all 3 of them at the same time, because we're going to build something very nice today. It will take a while to load because there's a lot of data to process. Yeah, now it's there. You can see that the chart has changed quite a bit. The bars are now colored. This is why I selected a darker background this time. You can, of course, change and customize the colors the way you want so that it fits your style. Now I'm on the Bitcoin chart 90 minutes. I'm using the index chart, by the way. And you can now start building your own control panel for Bitcoin for the 90 minutes charts with my 3 indicators. And I tell you how this works. So the first thing you want to do is you want to merge the 2 oscillators so you get more space and you can actually make the best out of your of the readings. You can see both values at the same time. This is very convenient, and this is what we're going to do. So what you have to do is to right-click on one of the indicators, for example, the one that is below, algo score MTF in this case, and then go to move to existing pane above. And then they are going to merge into one. And the next thing you want to do is to get rid of the left scale and put it up to the right side, so that you click on the algo score indicator, for example, here, pin to scale, and then pin to new right scale. Now you have both scales on the right side in separate axes, and this way it will be easier to read what these indicators show you later. The next thing you're going to do is to deactivate these blue bands to make it a little bit simpler to understand. You just double click on the blue bands, as you can see here. This will open the Market Flow COG style settings, and you can disable bull and bear total. You don't need them right now. So it looks like this afterwards. This is how you want it to look like. Then you can go to the Market Flow COG overlay indicator and open the settings there. And what you want to do there is to go to inputs. Here you can see that it's still an alpha version. It's an early access, basically, just for you. I'm not advertising this. It's it's a test version. And I give you exclusive early access to this. You can play around with that. It's actually very useful. You will see. have some fun with it. So how to use it actually references this video. Then you have general settings. In this, you have a mode setting, the MTF, which is medium time frames, is the default one. You can also choose ultra low time frame, and high time frame. This is predefined. This refers to some presets I've hard-coded in there to make it a little bit easier for starters to deal with this kind of script. Now, what you want to do is to set this to low time frame because we're on the 90-minute charts. Use current chart is enabled by default, so it uses this 90-minute index Bitcoin chart. You can, of course, input custom data from a different chart by using the ticker. Now you have several modules to choose from, and by default, all three are deactivated, as you can see. Yeah, and what you're going to do is you're going to enable the show center of gravity module. This is similar to the center of gravity that is included in the adaptive range indicator that is also on TradingView. However, this one is a bit more advanced because it features 3 different types of COGs, and I will explain to you what they mean. 4 different types, I'm sorry. So now you can see that you have 4 green lines on your chart. So the first thing you want to do is to keep it a little bit more simple, get rid of the ULTF center of gravity. You can go to style options in Market Flow COG overlay and deactivate the ULTF one. So it gets a little bit cleaner and easier to read. Now, as you can see already, it kind of gives this price action in Bitcoin some structure. It's not perfect, but it doesn't need to be perfect. It's not its goal. It's not meant to give you perfect structure. It's just there to to give you some information on where Bitcoin is in terms of market flow, or where price is in terms of market flow. And these 3 lines, the below one, the lower one, is the high time frame one, as you can see, and this is the center of gravity for higher time frame mean reversion. This means that when price comes back to this entity, it has reverted to the mean on the higher time frames. This is very important. Of course, there are different definitions of mean reversion. You can take, for example, the 200-day moving average or something like that. But these entities you got here are actually adapting themselves to the trend. The 200-day moving average does not do that. It's just calculating a mean based on 200 days. This entity has a lot more data in it. It is more flexible, and if you got a strong uptrend, it adjusts. It's adjusting itself to the strong uptrend and shows you the proper targets for mean reversion in a strong uptrend like this one. And as you can see, it gets hit very nicely here, but this is not the only time. This is valid for the entire time. As you can see here, before we started our bull run, these mean reversion entities, the center of gravities, were all gathered over here. And when price fell from the 12,000 region into the 9,000 region, it was actually drawn or pulled back up because the mean reversion entities are above price in this case. So price is being pulled back to these levels, as you can see, and it finds support there in this region. This is how center of gravities work. They pull price back to them. This is why they called center of gravity. So when you got a structure like this one with the center of gravities, you can expect, for example, when price is above all of them, like this, that there is a strong force, a strong gravitational force pulling price back down to these entities. And if you're in a strong uptrend, it is more likely to see bounces on the first one, the lower time frame version of it. Then if we see a strong pullback or a medium-sized pullback, we get reactions at the second, the medium time frame version. And in strong downtrends, strong local downtrends, you see price coming back to the higher time frame version. And if we fall below all of them, if price were to continue down here, there would be a very strong gravitational force up. So we might see a very strong move up into this region soon after. This is how to read center of gravities, and they are very useful in order to determine whether a market is overbought or oversold. RSI is useless. You don't need to look at RSI in terms of overbought and oversold because it's not reliable. It's not telling you anything about overbought and oversold, actually. Don't know why this indicator is still being used like that. But anyway, you can use this one as an indication for overbought and oversold conditions, because it is overbought when it is far away from the means to the upside. For example, we had this very strong rally over here. You can see it is colored in red because the distance to these entities, to the center of gravities, has grown quite a bit. So you can see that, yeah, this rally was not sustainable. It was bound to come crashing down in a very harsh way, and it went back to the center of gravities over here. So this is how this can be read. Yeah, sure, of course. If you got a very strong uptrend, it could price could go on like this for a while. This is normal because a trend is a force, and you can't simply reverse that trend right away. The momentum needs to run out, or we need to approach very strong resistance for a strong uptrend to turn to a downtrend again. So this is what a trend is. So basically, yeah, there's no way of telling will it go higher or will it crash. But you can, with this kind of analysis, you can see when we are in a region where going high risk longs is probably not the option of choice, and where you might want to look for shorts even. You can even do so in an uptrend. So this is the first thing, the center of gravities. You can, of course, if you don't want to see all three of them, you can stick to the medium time frame version and see how price is interacting with it. Do it as you wish. The next thing to look at is the deviation bands. I'm going to keep this enabled center of gravity, but I'm going to choose the lower time frame and then activate the deviation bands. Because we are on the lower time frame mode here, this will now show deviation bands around the lower time frame center of gravity. And this gives you some structure on where we are in relation to this entity. So how to read this? If we approach the upper end or the lower end, or if we even go beyond that point, for example, like here, you can see that we are in a danger region. This is similar to Bollinger Bands, where you see they are prices leaving the Bollinger Band region to the upside. Then it is, yeah, it's at risk of coming back down. This is a very similar approach to this. However, this band is not a Bollinger Band. This is something completely different. But the mechanics behind it are very similar, because Bollinger Bands as well as center of gravities are dynamic entities in markets. They are changing based on new data all the time. Yeah, and this way you can actually see when price is showing a deviation from the normal or standard behavior we have been observing for a while in a trend. Like this, for example, you can see we got the strong moves into the higher region of these bands on the lower time frames. So we might want to look for a quick scalp short like this, or you can observe what is price action doing here. And yeah, this drop was a bit sudden, but this is how you can use it. You can add to your own analysis this information on are we in a risk region to see a tiny pullback here, or are we in a chance region where we are in the lower part of this and where we might see mean reversion to the center of gravity. And as you can see, prices, yeah, it's always finding its way back to this. This is why it's a center of gravity. It's very reliable, and yeah, I would call it a masterpiece. At least for my standards, I think it's one of the best things I've created so far, because it's actually reliable, and reliability is worth a lot. Significance is not. You can find significance everywhere, but if you got something that is very reliable, like in this case, for example, where price is coming back below into the lower region of these bands, it's finding support, showing strength, and then returning to the mean again. This is a law in the markets, and it's working very well. So you can use this with, for example, the medium time frame as well. So you're going to choose the medium time frame, and after calculating the bands, you see much more space in here to move in. It's best to zoom out a bit, maybe to the 4-hour chart in this case. Going to deactivate these two for a while. And you can see now it's basically the same idea, the same mechanics working on the medium time frames. So you can see when we are in the upper region and when price is below the center of gravity, where it might return to it very soon after. This is how it works. In this case, this was our strongest uptrend yet. And as you can see, we approached these outer regions over here, and we, in both cases, there were strong down moves afterwards. Yeah, this is it for the center of gravity and deviation bands. Play around with it. It also works in downtrends. It works in sideways. It works everywhere because it's adaptable. And this is why it's so powerful. You don't have to fear that this becomes irrelevant at some point, because the mean reversion concept, the law of mean reversion, it will always be powerful enough to find trade setups based on that, independent of the market environment in this case. So I'm going to deactivate the deviation bands and also the center of gravities. And now we have a third module. It is the trend EMA. And this trend EMA module actually tells you about trends on where the trend is going on 4 different settings. For example, we have the ULTF, LTF, MTF, and the higher time frame. And as you can see on this one, I'm going to switch to the daily chart here to show you what the trend EMA is telling us. You can see a color code here. This teal aqua color tells us we are in a strong uptrend, bull run basically. On the higher time frames, it's the bull run or the bull market trend, main bull market trend. The green one is an uptrend. It's not a super strong uptrend, but it's an uptrend. White tells us we are in a sideways market. For example, here, 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 here. You can see this fits very well. And orange tells us we're in a downtrend. As you can see here, yes, this is a downtrend, although this is more sideways price action, but the trend here was clearly down for a while until it recovered. Also this one, this was also a downtrend. This was also still a downtrend because we could have continued lower here or made something like this. So the downtrend was broken once we got back above these resistance area over here. Then, as you can see, it turned bullish here, super bullish, and now, due to this consolidation range, this super strong uptrend has turned into a simple uptrend over here. There's also the strong downtrend. We only had this once over here in the past, where we had this crash to 3K. It was, yeah, a very strong downtrend. So this tells you in which kind of trend we are. You can use this on other time frames as well. For example, you can use the medium time frame one. Then you go to maybe the 1 hour chart, and it will tell you what the medium time frame trend looks like. Here you can see we're in a downtrend, strong downtrend here. We saw the second leg down. Then this recovery, terminated the strong downtrend. It switched it to a simple downtrend. It went on, we found support, so it turned to a sideways market. Then it turned to an uptrend since we found higher lows here and price was constantly on the rise. Now we are in the sideways market again because of this drop. So basically this is now a sideways market. Yeah, same logic. Here you can see a strong uptrend, this phase where it's really going vertical almost, or in this case. So this is very helpful in order to see what the developments are. For example, you can see the strong uptrend is changing to an uptrend, it's changing to sideways. So there is the market is kind of rolling over, and as you can see, it falls down over here, finds support, and then continues its uptrend. This is something that we see very often. So you can actually prepare for these events by looking at what the trend is doing. Of course, it's a lagging indicator. This happens when the crash here is already a done deal. So yeah, there's this, but this is not meant to tell you that we will see big moves. It's meant to tell you in which trend we are in. So this trend EMA is being used by this indicator a lot to determine several things, but I'm not going to talk about this today because it's still a work in progress and the features are still not implemented. But this is going to play a huge role in order to evaluate the market here. All these settings, you don't have to look at these. You can play around if you want, but yeah, this is basically the CDEV values are deviation values for the deviation bands on the timeframes. You can adjust them if you want. These are fib levels. You can see this with 618, 5, 382. Yeah, then you got some values on when a trend is a trend. So basically, these are percent inclines of this trend EMA. So if it's rising 2% in a certain period of time, then we are in a strong uptrend, and so on and so on. So this is not that interesting. You can leave the settings as they are. Nothing to change here. What we really need here is the center of gravity module. This is what we want to use. Going to switch the lower time frames again and use the 90 minutes chart. Now on to the next indicator. The next one is the Market Flow COG oscillator, which comes as, yeah, it's basically these are a pair. You got the overlay and the oscillator, and both work together. It's very important to know that both show you different things and can do a lot of things that help you analyze the market. So I'm going to activate it. And as you can see, we have this colorization of the bars here. You can deactivate this if you don't want that. I find it rather useful at the moment, but it's still a work in progress, not very refined yet. However, you can use it if you want. I'm going to leave this on for now. And yeah, as you can see, there are different options over here. These settings are the same, as you can see, the deviation bands, because this indicator is also looking at the deviation bands, at the trend, but it's doing different things with it. It is actually calculating a score based on where price is in relation to the deviation bands and COGs in relation to, yeah, all these things on multiple time frames. So if these are the bands and of this medium time frame COG, and price is up here and the lower COG is down here, and you got this deviation. So it's actually doing some math with all these information provided by the other indicator. And it's calculating a score that shows you how likely it is to see mean reversion. So for example, you got this part where it is highly green, and we got a high score that shows you that it's very likely to see some mean reversion price action, so bullish price action in this case. And we also get these areas where it is likely to see some mean reversion price action, on the bearish side. So this is how this can be read and interpreted. But it is very important to know with this indicator that you have to look at price action in addition to this. So this is not a signal indicator. It doesn't show you any signals on where to buy and where to sell. This is just to help you identify times when we have pressure up or pressure down. For example, in this case, price is rising, we're in an uptrend. However, we know that the pressure is down. So it is only a matter of time until we roll over or crash down. And then you got the info where the COG is. In this case, I could actually use all of them, except for the ULTF maybe, but I could activate these three COGs. And now you can see that we got a very, very bearish score over here. It actually paints the candles in red because it's a warning sign. And then you can see that it is very likely to see some mean reversion price action into first this range and secondly this range. These are the target ranges. So you got the LTF and MTF COGs. This is the first target. The second target is this range between the MTF and HTF COG. And if we go below that, it is overperformance, and we will probably see a very strong move up. So this is how to read this. And as you can see, it shows you pretty well where the bottoms are. It could be a local bottom. It could be a reversal bottom. Yeah, of course, as we are in a very strong uptrend, the trend force is up. So it could remain bearish for a while. It is possible to keep a trend going despite bearish technical values. This is normal, and we have to accept this fact. It's not easy to deal with that, but there's no indicator that can tell you precisely where the top and bottoms are based on technical values. This is simply not possible. So all we can see is this is a risk region. We have to be careful. We don't want to go super long with a super big position size over here or high leverage longs here. This is not what we want to do here because it's a high risk region. This is basically to improve your risk management and not to tell you when the perfect time is there to short and long. Of course, you can find these spots, but you always have to apply your knowledge on price action as well. So, for example, if you see this sharp drop and the indicator tells you now we are in a range where we might see mean reversion. Yes, we are seeing mean reversion already, so we might continue up from here. But you can see we are making lower highs, and this is rolling over into a parabolic move down. So, and also we have this kind of descending triangle playing over here. So this is actually a sign that we don't want to long here yet, because yeah, the score might be on the bullish side, but the price action is still bearish, and we have this strong momentum down. So we might see still a move down, and it actually happened, but it led to the score becoming even more bullish, and we found support at the bottom COG. So basically this is what we want to look at in order to find long entries, and take profits on shorts and something like this. As you can see right now on Bitcoin, let me get rid of the drawing. So as you can see with Bitcoin, it's actually moving up after finding this bottom at the medium time frame COG over here. It flashed a signal here that we are now below the medium one, and it shows you that this move is overextended. We might see some mean reversion price action, and yeah, we got it. Now it's interesting to see what price will do from here. But as you can see, the score is turning bearish again, so we might face some problems in this region when price is above both these COGs and wants to come down again. So this is how to read this. If you see that price is above all three, you want to look at the ultra low time frame version, which is more adaptive. And as you can see, it's actually still down here. So yeah, we might see some price action like this here, or maybe it clears the highs, corrects a bit, and these COGs will follow shortly after. Maybe price will find support on them and go higher, or it will lose them with a failed breakout, and we will go lower and test these region again. So this is how you can combine your knowledge of price action and these indicator readings. Now, there is, let me see, there's a lot to talk about because these indicators are very powerful, very complex, and I want to keep it as simple as possible for you to make the best use of it. So these settings, you can leave them as they are. If you want to change the thresholds for when these bars are colored differently, you can play with these settings. These are deviation settings, basically, for the score that tells you when a candle is painted in a certain color, minus for bearish candles, minus for bullish candles because we are below the COGs, and the positive values here for the bearish candles because we are above the COGs. You can use this and play around with that. But I would recommend to keep it as it is. It's not optimized, and I only did some testing on Bitcoin, so it's not working with altcoins very well. The COGs work with altcoins, but the colorization doesn't work. The colorization doesn't work with altcoins very well. So I would suggest to deactivate it in case you want to look at altcoin charts. So now on to the grand final. And this is a very special indicator I've got for you today. These two are pretty cool in themselves, but they are still work in progress. So they need some development work in order to become very, very reliable. They are already pretty cool, but not yet advanced and tested. But this one, the algo score, it has been one of my flagship indicators for years. And my plans included to make this a paid indicator and to sell it because it's highly valuable. It is extremely powerful, and it's one of, yeah, it's a great achievement, I would say, and I show you why. I'm going to activate this in addition to, oh no, I'm going to deactivate this one and this one to keep it simple and clean. And now it tells you that it takes too long because I messed with the other ones. So yeah, it could sometimes tell you that it failed to load because there's a lot of code in there, and TradingView has some issues in executing that. So sometimes you have to reapply it by here, by hiding it and showing it. So this is how it looks like, the Algo Score MTF version, which you can use best on the 90 minutes, 2 hour or 6 hour charts. It doesn't work on lower time frames, and it doesn't work on very high time frames. This works on the medium time frames. And what this thing does is it's a meta-analytic indicator, and it actually takes, as you can see, a lot of data in, and you can see here with the indicator settings, we got a VWAP module, a trend module, a Bollinger Band module, RSI module, RSI divergence module, stochastic RSI, Ichimoku cloud, FIB retracement, MACD, TTM squeeze, money flow, and levels that you can define for yourself. The levels that are important to you, you can type in here. And this indicator takes all these this algo score takes all these indicators and calculates a score on how bullish and bearish the market is and how the market technicals are. So market technicals it represents the technical strength the market has. It's like the fuel you have for your car. So if you want to go by car to somewhere far away, you need a lot of fuel. So if we want to start a strong uptrend, we want to see a bullish, a high score. And this score is measured between -10 and 10. So this right scale here is the algo score scale. And I'm going to show you, basically you can, if you want, you can mark the ceilings. Okay, it doesn't work for now. I don't know why. But what you have to know is that price can move between -10 and 10. And it means that the higher score is, the more bullish the technicals are. The lower the score is, the more bearish the technicals are. So as you can see, once it crosses these green and red lines over here, why doesn't it work? I want to draw something there. Pin to scale A. Okay, I don't know. Can't draw anything on here. Okay, so what you want to see is when price is crossing this green line over here, you can see that technicals are becoming very bullish, and we might see an up move soon. It doesn't have to happen directly. It could take a while, but when technicals are bullish, it doesn't take very long usually for price to see some move up. It happened here, as you can see. It also happened here, but just a tiny bit. This is a dangerous situation, of course, because we have been seeing this price action in this parabolic move down. This is why you always have to consider, you always have to take attention to price action. It doesn't help you just looking at green and red signals. This is not how you want to use these indicators. You want to see confluence. So if you see strong price action and you see a bullish score, it's basically a sign that we might be close to a bottom. If you see bearish price action and a bearish score, for example, in this case, we had this ascending broadening wedge, which is a bearish pattern, and we had a bearish score over here. So it is actually confirmation or additional confirmation that it is a possibility to see, or it is actually likely to see a move down from here. And when you got on the MTF version, if you got a signal like this, it usually means that we might see further dumping here because the fuel was very low. You can see that the signals it shows you are very, very accurate because it takes in 10 or more indicators, as you can see. It's working with all these indicators. and aggregating the data and interpreting it. It's using my custom logic on when, for example, a MACD is bullish and when it is bearish. This is very delicate because you have to look at so many things. For example, the MACD shows you not only a cross. The cross happens rather late. The score is actually bullish when it is approaching a cross, because this is when the price action usually turns bullish. Not the cross is just the confirmation. So you have. What I did is to implement all this custom logic into this indicator. And yeah, it's evaluating the data very, very in a smart way. And it's showing you early when to expect moves in price. But of course, as with any indicator, there's no 100% reliability. You won't find that in oscillators anywhere. But this comes very close to have a very high reliability. You can try this out for yourself. Whenever we see these big red signals, there are usually tops, local tops, like here. Yeah, it's working very well. Sometimes, like in this case, for example, you see something like this on the algo score, and price still keeps going, but it is correcting on the way. This happens in a strong uptrend. You see price rising, and then flash crashing down. This is also correction. This is correcting this. You can see the score is rising quite a bit here, but not much. So this was not enough to recover all the lost fuel on this move. And you see this bearish consolidation over here. Yeah, and once the correction is starting, you see a rising score because the fuel is being refilled. Once it finds a bottom and it has a high score again, it will go up. This is how algo works, and I've been trading based on this indicator for years, and it is extremely, extremely reliable. However, always use it with your knowledge about price action. Never blindly trust a signal. Never, never. It's very important. You can, if you want, mess with these settings. For example, you can change the thresholds for showing you a signal. This is also very interesting. I implemented this feature because sometimes we see a crash like this one, and then you can see the color of this line turns, this teal color. It means that there's now a trading freeze ongoing. It basically tells you that it is not wise to enter positions as long as we are in an earthquake aftermath scenario. So we might see follow-up dumps, we might see V-shape recoveries. So this is a very high-risk region to trade in, very volatile. And algo tells you that this is, even though the score might be bullish, this is not something to trade in this case. But of course, the decision's up to you, and you can also deactivate this crash freeze by simply switching this, for example, to 100% or something. Right now, it's reacting to 9% moves in a short amount of time. What you can also do is to deactivate certain indicators. You can adjust all the settings, the relevant settings for the indicators. You can even choose which indicators are required that have to show a bullish signal for this to turn to a green bullish signal or a bearish one. This is so if you check RSI required, even if the line, the score crosses the threshold that you type in over here, it's not showing a green signal as long as the RSI is still not bullish. So this is very helpful. In case of MACD, you can see you can actually customize it with the logic I've mentioned earlier. Like you can use MACD only for momentum. So when it is pushing a trend, like when the bands are expanding and it's flowing into a certain direction, so that you can see you can use momentum. You can use turning points, for example, when the bands MACD and the signal line they come closer together and they approach a cross. This is when the turning takes place. You can only choose this, or in combination, you can use cross points for additional confirmation. There's so much you can adapt here. You can also, for example, simply deactivate an indicator, so it's not considered or included in the calculations. And you can, when you say, hey, Ichimoku Cloud is very reliable to me, and I have my custom settings that are very cool, you can give it a higher significance. You can tell it, algo that, for example, it should take it 4 times more seriously. So the score is the points for the score produced by the Ichimoku cloud are now multiplied by 4, so it has a much higher weight in the overall bullish in the overall score. So when the Ichimoku turns bearish and all other indicators are bullish, you will see that price will be very much lower than it would be if the Ichimoku cloud has only the weight of 1. This is how this these settings work, and you have to, if you have questions, just hit me up on Discord. I'm going to explain certain stuff if you want to know anything. If you want to switch the chart maybe to 6 hour, it also works there because it's a medium time frame version, but it doesn't work on the 1 hour chart. Here you can see it often shows you that we are seeing crashes. You can, in this case, simply turn up the percent so it's not reacting so sensitively to crashes, only in this case. Also, basically, a crash is also a move up, so just in the other direction. So it's not only looking at moves down, it's also at explosive moves up in this case. So here you can see on the 6 hour chart, it's consolidating the data a little bit. So you can see fewer signals like this, but they are at the exact bottoms, and this indicator does not repaint. So this is not changed in hindsight. This is real-time data you see here. Sometimes the signals are not as strong because you always have to look at price action. In this case, this was a very clear example that it is always important not to blindly trust a signal. It is important to read the chart. This is what we want to learn as traders, and not to trust signals. In this case, for example, we had a red signal. This is because, I can tell you why, we have been in a very strong pressure zone. Price had to break out of this pressure zone, and to achieve this breakout, this tiny breakout, it had to consume a lot of fuel, as you can see here. It's dropping very sharply. So the technicals were actually bearish here because it could have dropped back below and produced a failed breakout. It was simply that much pressure coming in here. But price managed to confirm support and go higher. And this triggered a short squeeze, and the short squeeze triggered a trend. So these signals are not everything to look for, especially not in pressure zones. If you have seen my deep dive session on pressure zones, you know what to look for. And you can read these situations and use this indicator in a more careful way. Yeah, this is now on to the really great part. We are going to use all 3 indicators at once. And this is where we are coming to a point where it is very, very nice to look at this chart and price action. So now you have all 3 of them on top of each other. You have the COGs. I'm going to get rid of the ULTF one. Over here. And now you can see these indicators are analyzing different things. The Market Flow COG oscillator is investigating or examining the market flow. The algo score is investigating or examining the technical strength. Completely different things. And you got the COGs to help you find a structure in price action. So with this information, you can come up with very precise, very powerful decisions in trading. So if you combine it with your knowledge on price action, this chart like this can make you a fortune. If you use it correctly and cautiously and never blindly trust signals. You have to read the situation, look at the data that is given to you, and come up with a conclusion. For example, in this case, we see a drop into the mean reversion zone, which is good, but the volatility is high, so caution is very important here. You see a retest. Sure, it could have gone up here. Well, that's how it goes, but it didn't do that. And most often we see some sideways price action first. And you see lower highs. This is a warning sign. We have a high score here, but it drops to the mean levels of 0, around 0, very fast. And the market flow indicator tells us, yes, this could see some bullish mean reversion soon. However, the price action is bearish. There was panic selling going on here. We had this parabolic move. And this is why we don't trust this blindly. We read this and see, no, okay, this is dangerous. It could do a second leg down, as we see with an ABC correction like this. very often. So yeah, we saw this move down, but we knew that the score was already bullish, so it was only a matter of time until we find a bottom in this region. So if we see this kind of price action here, and this, it's a very good sign that we might be seeing a move up to these COGs soon and potentially produce a new uptrend. Yeah, and it happened. But we had this nasty wick down. But as you can see, this HTF COG is still acting as support. Don't underestimate these things. If we are here and you have the COG here, yes, it could dump below, but then you got some good entries down here. But combined with your analysis on levels, for example, you could have seen that this level is a huge one. As you can see, it is a divider of this swing low structure over here. A lot of hits, confirmations. So you could have seen this level in advance. You see we have this price action above. It's still not strong. We make lower highs, so it's still not strong. We have bullish divergence. We have a high score, here, very strong support down here with a COG, with a level. So what to do? Yeah, this is the region to go long. And yeah, it would have worked. This is how to analyze this. You have to use your knowledge. You have to use the data and combine it all together to come up with a very good decision. How about this case? You see we have this overextended move to the upside, a very strong bullish run with very bearish technicals sometimes. And we are above the COG, so this is at risk of falling back down all the time. So then you see this kind of move, this rising wedge-like structure. It could tell you, hey, we are going back to like here, for example. Yeah, this is possible. You can't read at any time, at any given time, when a trend will end. Catching market tops and bottoms is extremely difficult. But the value here is not that it tells you where the top is. It tells you when to be cautious and when to not go 100x long. This is not where you want to do this. This is how I'm using it very successfully. And yeah, this is an impression on what you can do with it. I think it's a very powerful thing. And if you come up with some nice settings, let me know. I hope you have fun with it and some successful trades. Yeah, let me know what you think. And I hope this is a, yeah, I know that this is a gift that a present for you, as I've received so much support along the way. It's very hard to be a small content producer on social media nowadays. Yeah, but this is my way of saying thank you, and yeah, have fun with this, and see you later.